The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 9th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. And when you and I, we make that one little 2x4 shift, it means we can go ahead and find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. Of course, I'm going to do the best job I can. You talk about life happening for us. Well, it's happening apparently for us right now as my main computer system is down. I went ahead and powered it off. Then to power it on, just simply to get rid of, I do that often before the show, especially if things are acting a little bit slow out there. And unfortunately, it's in the middle of an update. And it's been doing that update for about 15 or 20 minutes. So we're coming to you from my laptop. That means that my screen's not the same. I don't have all the same set of tools out there. So we're just simply going to find out why this is happening for us. But I'm sure that it's for a good reason. Look, I want to tell you that I appreciate you being I am here to serve you, so feel free to reach out to us, 877-927-6648. You can do that by phone, of course, 727-445-1044. I would say you can ping me in the den, which you can, but I may not see those messages as often, and my email is shut down. So because I'm just dealing with one little screen here. So there was everything to get it up and running. But let's go to these markets out here. Let's figure out what it is that they're communicating to us. Of course, what it's communicating to me is I should update my laptop with all the tools as well. But that's another story. The Dow right now trading off 124 points. The S&P is down 22. NASDAQ Composite is off 89. Russell 2000 down 13 points. Gold is up $2. Silver's up 4 pennies. I don't have the correct contracts up here for light sweet crude, but we'll work on that during the break. I'll lead the charge here to the upside. It looks like Chipotle, dollar-wise, that's up $9 and change. Wynn Resorts is up about $8, 12%. DuPont, because of the potential merger talks going on, that's up $7. Syngenta up $6, that's 8.5%. To the downside, you've got Google leading the charge. It's off $21, about 2.5%. Amazon is off $17, down 2.5%. AutoZone is off $14. Whirlpool down 5%, about $8.50. But let's begin. So now I got to see what charts do I actually have out here. Well, I don't have very much, do I? Okay, let's first take a look at the Dow, see what it's done here. So let's get that chart up on the screen out here. This may take me just a tad here. So you're going to have to, unfortunately, bear with me. I absolutely will do the best that I can. Let's turn some things off here, and we'll just start from scratch. We don't need any volume because that's not there. I don't even need that. So let's take a look at what the Dow right now trading out at 17,456. And what the Dow is doing, it's trading into the swing point here from November 16th. So we're going to switch over. We'll switch over and take a look at the Dow Diamonds, try to get some type of feel from a volume standpoint. But the number you want to be paying attention to inside of the Dow today is going to be 17,483.01. That is the top of the November 16th swing point out there. And I don't recall if we got down. I don't think we got down there. Yes, let's see. Yesterday's low, 17,485. The high, we're talking about 17,483. So the Dow didn't get down there. The Dow was testing that swing point today. Yesterday, a couple of the ETFs did test that swing point, did it with lighter volume. So, and hi, how do you like that bounce that we had inside the market? Did you see that one-day rate of change yesterday above 10%? It's a beautiful thing, isn't it? So, we saw that. It's going to take me probably a while to get the advanced decline oscillator up on my screen. I'll try to do that during a break as well. But let's go switch over and take a look at the Dow Diamonds. So let's go see what our volume matrix looks like out here. Oh, I do have some old charts on my screen. Let's take a look at it in a moment here. We're going to get the volumes turned back on. So as we do that, let's turn the volume. That way we can just take a look and see what kind of, what do we have set up today. So November 16th, looks like that's got volume of 5 million shares. Today so far, you've done, well, you've done 5.6. So you've got some volume picking up as it's coming into that. Oh, okay, now we're back. Well, our benchmark really is probably more like the swing point from November 13th, which is 8 million shares. But even still today, you're coming down into that level, right? We're just past 1 o'clock. So you're coming in there with volume. What does that say? That says even if you get a rejection of price today, a rejection of price inside the Dow Diamonds. I gave you the number on the Dow. And the side of the Dow Diamonds would be 175.06. And what I mean by a rejection, if you close above 175, no, hold on a minute here. High 170. Yeah, if you close above 175.06, then what that would say is you're still going to get back down there and test it. If you close inside 175.06, anything underneath that says you're going to go test the 172.15 level out there. But let's go to our first caller. Let's go to Jim in Tampa. Jim, thanks for calling. Thanks for holding. How are you doing today?
I'm doing good. How are you?
Well, I would be doing better if on my main desktop the Windows update actually didn't start. and I'm wondering, you're a Windows expert, because I'm wondering, why is this thing still working on 6 of 21? It's been doing that for a while. I called a buddy of mine real quickly and I said, hey, can I turn this thing off? And he said, no, you don't want to do that. So in any event.
No. If you turn it off, you'll just screw it up, and then you may have to remove your operating system and put it back on again. If you wouldn't want to do that. So.
Well,
but
then
I'm not an expert, but I used to work in the electronics industry. So.
Well, you know more than I do, and you're the second confirmation. Do not turn it off. So I am not going to turn it off. We'll just hobble through here. But it looked like you have a question with regard to swing points. So how can I help you?
Well, I'm relatively new at trying to do any kind of a short-term swing trades or day trades or anything, and I'm trying to come up with a system. And I've only discovered TFNN about a month ago, and I'm wondering about swing points on exchange-traded funds or indexes as to how you pick your swing point based on volume and price. Can you pick a swing point within just 1 or 2 days, or is it a hindsight kind of thing where you look back and say, oh, that was a swing point back a week ago or something, you know?
Well, a swing point is a swing point, which is basically where you're going to see what I'll call a major change in direction. So kind of picture yourself driving down the road, and when you're driving down the road, you know, on your right and left-hand side of the street, you might see all of these entrants into different subdivisions or what have you. But your swing points are going to be those major intersections you come to, those stoplights out there. And then you can find swing points on any time frame. The idea is that whatever it is that you're going to be swinging in, swing trading, whatever that time frame is, that's where you want to stay. So that's the first element. So the first thing I would say is give me a vehicle that you like to trade or that you're looking at trading. You mentioned the exchange-traded funds, the ETFs. So which exchange-traded fund would you be interested in trading, and what time frame?
The diamonds.
The diamonds, okay.
Yeah, and that's another thing. I look at it, all these different time frames, and it sometimes throws all your moving averages kind of out of whack, and you think, well, how come the moving average looks so much different at this time frame, you know? But I've looked at any time frame, like 1 month and 30-minute charts.
Well, let's answer your question. Sure. Well, let's just for the heck of it, let's put this on a 30-minute. Shoot, I've got all the intraday out here. Let's keep this on a daily time frame, just for the time being, and that way, okay. Because we were talking about this just as you were calling, anyways. So the swing point. The swing points that you would really pick out on the Dow Diamonds, at least that I would pick out on the Dow Diamonds, with regard to what it's doing, you've got the swing point where it made its most recent low, and that's going to be November 16th. And that's the swing point right now that it is trading into. So that's your swing point low. For a swing point high, it becomes pretty easy for me to come back and take a look at it. It's either going to be November 3rd or November 4th. I picked the one that has the highest high. 179.60 is on the 3rd, and 179.59 is on the 4th. It sounds like we're going to a break. Can you hold on through this break here?
Sure.
Alrighty. This is Steve Rhodes with TFNN. When we get back from this break, we're going to go back to Jim, and we're going to take a look at swing points in the Dow Diamonds. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
back, folks. Dow's off 122. S&P is down 23. We're going back out to Tampa to a new listener to TFNN, Jim. And Jim, how'd you locate TFNN? You mentioned you've been listening to us for about a month.
I saw it on the internet. Yeah.
Oh, you did. Great. Okay.
On Facebook, actually, I think it was.
Oh, very nice. Well, you did see that? Did you ever see that? One of my favorite Christmas movies is the movie called The Santa Claus.
Oh yeah.
You like that movie?
I do. I like Tim Allen.
Yeah. It's one of my favorites. Now, I hope that, when you were on our Facebook page, there's that scene in the Santa Claus where, he takes the card out of Santa's pocket, and then when he gets up to the North Pole, they go ahead and they show what the clause of the Santa Claus was. And in our case at TFNN, once you signed up, that meant that you now are a member of the Hotel California, and once you're in, you're in. You can't get out. So you're now, just like in that movie, The Santa Claus, you're now stuck with us for life. So, but we're going to make it a good visit with us. Now, we're talking about swing points. And so I just want you to think of them as really the major intersections of where you see price really change out here. And so inside the Dow Diamonds, if that's one of the ETFs that you're going to trade out here, what you're looking for, traditional volume analysis says the following. If you are moving either up or down into a swing point, right now we're talking about the market moving lower. If you're moving into a swing point with volume, even if you don't close inside it, you are more likely than not going to go back and at least test that swing, which could be the top of it or could be the bottom. In the case of the Dow Diamonds, that would be the high of 175.06. If you close inside it and you're coming in with volume, it says more likely than not you're going to go test the low, 172.15. What I would say with regard to the volume analytics inside of the ETFs for the indices, they are not as reliable from a swing point analysis, and I think it has more to do with high frequency trading or hedge funds using these vehicles. It is, though, very reliable, and I mean extremely reliable, when we take a look at individual stocks. So I'm just going to throw that caution out there. I have seen that change with regard to the index ETFs like the Diamonds, the SPYs, the IWM, and the Qs out there, that volume analytic is not as reliable as if we were to take a look at an individual stock. But nonetheless, that doesn't mean that you don't trade them. I'm just saying you've got to be careful out there. There might be more Santa Clauses, so to speak, clauses that are really not not visible to the naked eye. So that would be a swing point. And so ask me. So from a swing trading standpoint, what I would suggest is that if you are going to go ahead and trade any of these index ETFs, that what you want to do is you want to gain access to the futures account. So in the case of the Diamond, that would be the YM as an example. And if we switch over to it, I'm going to just put that up on my screen. And the reason that you want to, what the heck? I've got 2016. It would be better if I put the 2015 contract up there. And the reason why you want to do that is because it has better analytics with regard to what's going on inside of swing points and patterns that are out there. So I would just, and that's going to even help you on 30-minute time frames. As well. So, of course, on this chart here, boy, it's so screwed up on my laptop, I don't even have the CME hours out here. So I'm just going to throw that out there to you. So what other questions? What have I? Ask me some questions. It's your lucky day because of my system being down and things happening for me. It's your lucky day. You get to be my co-host here for a while.
Okay. Well, okay, like let's say it's an individual stock like Apple or something. If you're looking at it on a daily basis, would you pick? How would you know within the last day or two if that's going to turn out to be a swing point, or do you look back in time? I'm
looking back in time.
Okay.
Always looking back to a stock market analysis, technicians, we are great at looking back on the chart and telling you what has happened. Nobody can call the play-by-play better than a stock market technician. I mean, we are really great at telling you what just happened. The real key, though, is being able to take a look at other patterns. That's why you want to become a pattern recognition expert, where you have reliability in these patterns to help you to understand what's going to take place in the future. As an example, I know, that when we see the VIX index have a one-day rate of change greater than 10%, that means the close of yesterday versus the close of today, and it's more than 10%, you're going to see a bounce inside the marketplace. I don't care what's going on. But you're welcome to stay on through this next break. It's totally up to you.
Yeah, I'll stay on again.
All right. We're going to go back to Jim as soon as we get back from this break. Steve with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Folks, sorry about that. We are in Plan C now. For some reason, my system cut out the voice piece of it, but we're back. Jim went ahead and dropped, so no problem there. We'll just finish off the question about the swing points here real quickly, and that was with regard to Apple. And Jim, I would say to you, in the case of Apple, I'll pick out the swing points that you would be paying attention to. November 4th is to the upside, and the one that you're really focused on right now is November 16th. And you could say there's a junior swing point, if you will, on December 3rd, but it's really the November 16th. Again, you're looking for those major directional changes whenever you take a look at the chart. Now, in the case of Apple, on November 16th, the volume there looks like 3.38 million shares. Yeah, 38 million shares inside of Apple. Today, you're moving down with 26 million shares. So you're moving down with volume. It's accelerating to the downside. The last time that price moved down was with 42 million shares. 26 at this time of the day. It's probably a little bit lighter volume than December 3rd. But until the top of that swing point, which is the trading session of November 16th, and that high is 114.24, you really don't have any information about what Apple is going to do. It's really, as Tom likes to say, at swing points, the market squawks, walks, and talks. And in between that, it's nothing more than gibberish. All right, so let's get back to these markets out here. Let's take a look at, not to belabor any point, but let's go take a look at the Qs and see what the Qs are doing. They're off $2.16. 300, let me see, boy, I don't have 31 million shares so far. Let me go ahead and clean this chart up just a tad. So we saw that the diamonds had made it all the way back into the November 16th swing point, whereas in the case of the Qs, they have not. The swing point high is 111.44. And even yesterday, well, not yesterday, but a couple trading sessions ago back on December 3rd, price was unable to get down there. Today, what is it that we can say? Well, last time that the price pushed lower, it did it on December 3rd, did it with 42 million shares. Today, you're down 31. There's volume that is accelerating to the downside for sure. So this would suggest to me that, the Qs want a lower price out here. I imagine we're going to see the same thing inside the SPYs. And we take a look, but here's the conflict that the market has. If we take a look at it, let me see here. Okay, great. The conflict that the market has is if we go over here and we take a look at the summation index. Now, let's look at this page here. We did this yesterday. This is the New York Stock Exchange. And what we're taking a look at is the advanced decline oscillator reading. And as we take a look at it, the reading right now is minus 192. Minus 192. Typically at minus 150 is where we see the market bounce. Now, we saw the market bounce this morning. That bounce had perhaps more to do with yesterday's VIX one-day rate of change being 10% than anything else. We saw the market give up the highs, move lower, but this oscillator reading at minus 192, the last time that we were down to a level this low was back on November 13th. And over the weekend, we came back to work November 16th, and the markets went ahead and moved higher. When we were most recently down at this minus 190-ish type area, 184, back on July 27th, very next trading session, we saw the market move higher for 4 trading sessions out here. The same type of thing back here on the trading day of June 29th. We saw the market move, in essence, higher for 3 trading sessions. So the market inside the NYSE is extremely oversold. If I said overbought, my apology, oversold out here. If we take a look at the Dow oscillator, we're going to see that this, too, is in its oversold reading. Now, in the case of the Dow, that level is when it gets down to about the minus 0.25 area. It's at minus 2.6 right now. If we go to, and we already looked at the Dow Diamonds, right? We looked at the Dow Diamonds. With the Dow Diamonds, we're saying to say you're moving into a swing point with volume, that being November 16th. But it's really, you've got to anticipate. It's not like this thing is going to just keep on heading south. It's going to bust through these lows or anything along those lines. You've got to anticipate, or I'd like you to anticipate, that there is a bounce. If we take a look at the VIX index, it certainly has heated up today. It's trading out at 1990. Do I have it? The one-day rate of change so far is 13% out here. What does that mean? If you close like this today, that means you need to anticipate a bounce or bottom. I say more inclined to be more bottom-ish, at least for a few days. And that's because if you put these two things together, the VIX index along with the oversold readings that you and I are taking a look at in the advanced decline oscillator readings out there, that's really its message to us. Let's take a look at a couple of these stocks here that are moving. That's actually even a better way to take a look at swing points. Let's try to get a feel for what Wynn Resorts is doing. It's up $8.47. It's up 13%. It's got some nice volume behind its move so far, about 9.8 million shares. So as we take a look at what Wynn Resorts is doing, Wynn Resorts is moving into its most recent swing point high, which you take it all the way back here. This is what I would look at. Let's put a line across here, the bottom of it, if we can get this tool to work. Well, okay. I can see that I haven't used this for a while. That's quite a line. Doesn't even have the number on it. But the bottom of the swing point, I'm just talking to myself, $70.93. Now, at that swing point, let's try to put this over here, a little data window. So what we know about Wynn Resorts is that it's moving into the high that was generated on October 15th. That high's got 8.5 million shares. We see that price has rejected the bottom of that swing point, again, that level being $70.93. Even if you close under $70.93, it says that Wynn Resorts is going to get back up into that swing. More likely than not, Wynn is going to go test the high of that level, $77.25. The probability goes up that that high would be tested if you see a close inside that swing point today. So $70.93 is the number to be paying attention to inside of Wynn Resorts. Does that really change anything inside of Wynn Resorts? It really doesn't at this stage. The change in polarity, if you will, inside of Wynn Resorts would come if it can get above the swing point here, or where it's been basically somewhat found resistance, consolidation-oriented. But it's really going to be the September 16th type area. In fact, it'd probably go right back here. Say, no, it didn't get down with any kind of volume. But right around the level of 75.10. If Wynn Resorts can take out 75.10, and quite frankly, if it can take out the high and close above 77.25, and do that with more than 8.5 million shares on a volume day like today, then what you have is an A to B equals CD to the upside projection out there, and that is inside of Wynn Resorts. You might ask, what's that A to B equals CD? And if I've got the tool turned on, I'll tell you. There we go. We'll turn it on. And if we take a look at that A to B equals CD pattern, this is where, from a pattern recognition standpoint, this is how we use the left-hand side of the chart to help us project where price will go to. And in this case here, it's a perfect example of utilizing swing points, because when you're using the A to B equals CD pattern out here, what you're doing is you're using on the left-hand side where the real swings have taken place. Inside the apple, that was on October 1st at the low. It was on October the 15th at the high. And then the final low here, the C point of a potential A to B equals CD to the upside, is on the trading session of November 18th, and that is inside of Wynn Resorts, ticker symbol WYNN. Let's go take a look at Google and see what it is doing to the downside. See if this thing is pushing to the downside. It's down with about 19 bucks, trading out at 743, volume of 1.6 million shares. Now, Google had wide price spread, accelerated volume on this trading day right here, and that is at the trading session of October 23rd. And that's what it's moving back into, and that had volume of 6.6 million shares. So Google is pulling back with light volume out here. It hasn't gotten to the swing point, so it's not squawking. It's just walking, and it ain't talking. Hey, how about that out there? And so that really means it's not providing you and I with much of a message other than it's not as if Google is really ready to crack and to break down, at least using those volume metrics. Now, there's nothing more friendly to you than a gap. In this case here was a gap up, because that gap really represented a wide-ranging bar. If you take a look at where Google was priced at on October 21st and closed at, which was 675.79, if you were to just simply, if it had opened that following day, right where it closed and move all the way up to the upside, you'd be taking a look at that as a wide-ranging bar. That's what gaps are. They are wide-ranging bars to the upside and to the downside. When price pulls back into a breakout area with light volume, that would mean potentially to the bottom of the gap. That's where you'd want to buy. Likewise, if price moves up into a wide-ranging bar or to a gap down, that's where you'd want to take a look at selling. In the case of gaps, though, they provide a little bit more of a unique element, and that sometimes it is at the bottom of the gap that actually acts as a support level. So inside of Google, that could easily be the 701.50 level. But we see Google pulling back and doing it, in essence, with some light volume compared to that breakout area. And we take a look at Amazon, so let's look at some of these high flyers out here just to get a feel for what they're doing. And as we take a look at those high flyers like Amazon, what we can see is Amazon today is pulling back. It's doing it with 3.1 million shares. In the case of Amazon, its sign of strength is way back here. That would take you back to the trading session of October 23rd. And that price point, by the way, is 619.45. Volume there, 10 million shares. So it's pulling back. It's really just trading sideways. That's all that Amazon is doing as we speak right now. Let's take a look at AutoZone. AZO is a ticker symbol, off about 2%, down 15 bucks. In the case of, didn't mean to do that. In the case of AutoZone, this is the daily chart that we're looking at. Hey, I believe we're getting ready for a break. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 79 points right now. S&P's off 17. Let's go take a look at the euro here. The euro is flying. We talked yesterday about the, most Japanese candlesticks are simply reversal type patterns out there. But there is one continuation pattern, and that is called the rising three. And if we take a look at the rising three, that's what's in place right now. That says that the euro versus the U.S. dollar is headed higher. What it really needed to do, we talked about this pattern here yesterday, what it really needed to do was really just get above the close of the trading session from December 13th, which was 1.0937. Conservative traders, with regard to this pattern, they look for a close above the actual high. That's 1.0981. Now, what does that say to us? Well, that says to us that the price is moving higher. That says the U.S. dollar index is going to go ahead and get weaker. Now, we have two different swing points that we can choose from to try to determine where price is likely headed to. Let's use the more conservative one. That's the October 15th high down to the low on the trading session of December 3rd. This says the euro is headed for the 111 area, 111 to potentially 112. And I really think that it's more likely, it's going to take, it's one floor at a time. So it's that 111 level that is first. That obviously is going ahead and putting some weakness inside of the U.S. dollar index. That's off a cold dollar and more. That you can see how these two are inverse to each other. Of course, inside the U.S. dollar index, we have 5 other currencies that we need to focus on. Inside the U.S. dollar index, if we take a look at retracements, though, we just simply go from the October 15th level to the high out here. This says U.S. dollar index likely headed to 96.41 or 95.27. Now, at that 95.27 to 96.41 level, that's where we saw the real last break to the upside inside the U.S. dollar index. That's the October 22nd level. So it looks to me like that is where that is headed to. Now, gold here today is performing fairly well, I suppose. Is that what you would say? No, I wouldn't say that. You've got gold trading at 1077 with the U.S. dollar index pulling back like that. Now, the last time that we saw that move inside the currency marketplace, that was back on, December 3rd? I think it was December 3rd, right? And there was like a delayed reaction. Let me pull this back here and make sure that we're looking at those dates. Come on, don't do that. December 3rd? Yeah, December 3rd. So we saw the big move down inside the U.S. dollar index on December 3rd. We're seeing one certainly today. But gold on December 3rd did nothing. I got to put the gold contract up here. So the interesting thing is gold's doing nothing today. Oh, man, why is that doing that? Sorry, folks. It's a real bummer when your primary system is working. But hey, in December 3rd, we saw basically no movement. So we're seeing no movement today. But we did see things unleash inside gold on December 4th. So the question is going to be, is it going to be tomorrow? Is tomorrow going to be the day for gold? But, considering gold priced in dollars and you got the dollar pulling back and gold's not doing a whole heck of a lot, here's what I know, and I can't tell you how it's going to happen. I just know that it is going to happen. And I'm probably in the small minority here. But gold is getting ready to form a major style bottom out there. And so days like today are just really to kind of convince people that it's really not. But the reality is, Steve-O's telling you it is. And only time will tell. But that's looking at the right-hand side of the chart. Any of us technicians, we're really great on the left-hand side. The key is, how can we be on the right-hand side of the chart? So, folks, thanks so much for staying with me today through this Band-Aid situation. My main computer still installing those updates. Very slowly, though. Time to head to the beach. Have a great Wednesday, and I look forward to seeing you on Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.